Welcome back to Investing Talk Podcast. Today, we're going to be talking about a company that's been making headlines, but not exactly for all the right reasons lately. DigiAsia, ticker symbol FAAS.
Yeah, what's been really striking about them is their stock performance over the past year. I mean, down a gut-wrenching 95.29%, and just last week it took another nosedive, dropping almost 20%. We're talking about a company whose market cap is now measly $5.13 million.
Yikes. So investors are clearly hitting the eject button and hitting it fast. But what's fueling this free fall?
Well, I mean, it's not just like a general market downturn. DigiAsia's got some very specific issues, and I think it starts with their financial health. Remember that forbearance agreement they entered into? I mean, that's a huge red flag for investors. What it basically means is the company's having trouble meeting its debt obligations, and creditors are giving them some leeway. But only for now.
Okay, wait, let's break that down for our listeners who might not be totally familiar with forbearance agreements. What does that mean in practical terms?
So imagine you've got this big mortgage payment due, but you're short on cash. So you go to the bank and you're like, hey, can we work something out? I need a little bit more time. And the bank, instead of foreclosing, they agree to postpone or reduce your payments temporarily. So that's essentially what's happening with DigiAsia. They've gotten some breathing room, but it definitely signals that there's some underlying financial distress. And if they don't get their act together soon, they could be in serious trouble.
Okay, so that explains why investors are spooked. But then we saw some seemingly positive news. The partnership with Digit9 projecting a potential $250 million in cross-border payment volume. And shortly after that, the bombshell announcement. PayMate wants to acquire DigiAsia for a whopping $400 million. Shares obviously jumped on that news. But is this a lifeline or just delaying the inevitable?
It's complicated for sure. On the one hand, the Digit9 partnership, that could be lucrative if it lives up to the hype. And the PayMate acquisition, if it goes through, could infuse some much-needed capital into DigiAsia and give them access to new markets, particularly in India.
And PayMate isn't just buying them out. They're also committing to an additional $25 million cash investment and planning to list the combined entity in India. That sounds pretty promising, right?
It does. It kind of sounds like a potential turnaround story, but I think we shouldn't get ahead of ourselves because the acquisition itself raises a ton of questions. What are the synergies between these two companies? What's PayMate's track record with acquisitions? How smoothly can they integrate DigiAsia? These are all critical factors that will determine whether this deal is a success or another nail in the coffin.
Right, we can't just assume this acquisition is a guaranteed win for DigiAsia. It could be a game changer, but it could also be a disaster. And then there's the whole fintech landscape to consider. Some analysts are incredibly bullish on DigiAsia's long-term prospects, predicting a potential price target of $14.85 by 2025. That's over 2,456% growth from where it's trading now.
Wow. Yeah, the fintech industry is definitely hot right now. And if DigiAsia can overcome its current challenges, there's certainly potential for significant growth. But remember, those analyst projections are based on a lot of assumptions. One, that the PayMate deal goes through smoothly, that they successfully integrate and expand into the Indian market, and that they address those underlying financial issues.
So it's a high-stakes gamble. And speaking of gambling, let's talk about just how volatile FAAS stock is. We're talking a volatility rating of 15.44%, and that negative beta of negative 1.63 means it often zigs when the market zags. Not exactly a comforting thought for risk-averse investors.
Right. Let me explain what that negative beta means for you, the listener. Imagine the overall market is going up. A stock with a positive beta would likely rise too, maybe even more sharply. But a stock with a negative beta like DigiAsia might actually go down even when the market is doing well. It's like driving with your brakes on while everyone else is speeding up.
So even if the fintech sector booms, there's no guarantee that DigiAsia will ride that wave.
Exactly. And when you combine that with its extreme volatility, you're looking at a stock that can swing wildly in either direction.
So where does this leave us? We've got a company facing some serious financial trouble, potentially game-changing acquisition, and a stock that's as unpredictable as a roller coaster. What's the bottom line for investors trying to decide whether to buy, sell, or hold?
That's the million-dollar question, isn't it? And to really answer that, we need to dig deeper into DigiAsia's financials, analyze the details of the PayMate deal, and assess the overall risk-reward profile. Let's start with the financials. The forbearance agreement, like we were talking about, that's a major red flag. To really understand the severity, you got to look beyond just the stock price and dig into their financial statements. What's their debt to equity ratio? How much cash flow are they generating? What's their working capital situation? I think those are like the kind of questions you need to be asking to gauge the true depth of their, financial distress.
Yeah, and those are the types of questions you would ask if you were thinking about investing in any company, right?
Absolutely. But they're even more crucial when you're dealing with a company like the DigiAsia that's already showing signs of, financial instability. You need to make sure you understand that potential downside before you even bet on any potential upside.
Okay, so let's say you've done your due diligence on the financials, and you're still intrigued by this potential PayMate acquisition. What should you be looking for there?
Well, first you need to understand the rationale behind the deal. What are the specific synergies that PayMate sees? Are they acquiring DigiAsia for its technology, its customer base, its market access, or something else entirely? Then look at PayMate's track record. Have they successfully integrated companies in the past? What's their history with acquisitions? Are they known for creating value or destroying it?
You're basically saying, don't just get swept up in the hype of this big acquisition announcement. Take a step back, look at the cold, hard facts.
Exactly, because a poorly executed acquisition can be disastrous for both companies involved.
Now let's talk about the elephant in the room, the potential risks. I mean, we've already touched on the financial instability and the uncertainty surrounding this PayMate deal. What else should investors be wary of?
I think one major risk is what we call execution risk. Even if the PayMate acquisition goes through without a hitch, DigiAsia still needs to prove that it can execute on its plans. They need to integrate seamlessly with PayMate, expand effectively into the Indian market, and of course overcome their financial challenges. That's a lot to ask of a company that's already struggling.
Yeah, and what about competition? I mean, the fintech space is incredibly crowded these days.
Oh, that's right. That's another key risk. DigiAsia isn't just competing with other small players. They're up against giants like PayPal, Stripe, Square. Not to mention a whole slew of innovative startups. They really need to demonstrate a clear competitive advantage if they want to thrive in this environment.
So even if they pull off this acquisition and navigate that competitive landscape, there's still a chance they could stumble and fall.
Absolutely, and with a stock as volatile as FAAS, even a minor misstep could send the share price plummeting.
It sounds like you're painting a pretty cautious picture here.
I am, and that's because I believe in being realistic, especially when it comes to investing. DigiAsia is definitely a high-risk, high-reward proposition. There's potential for a significant upside. But the downside risk is equally significant.
So given all of this, what's your final verdict on FAAS? Is it a buy, a sell, or a hold?
Well, based on the information we have right now, I would recommend either selling or avoiding FAAS. The risks simply outweigh the potential rewards at this point.
Okay, that's a pretty strong stance. Some might argue that the potential 2,456% upside is worth the gamble. What would you say to them?
Well, I'd say that anyone considering buying FAAS, they need to go in with their eyes wide open. They need to understand that they're not just investing in a company with potential, they're investing in a company with a mountain of risk. And they need to be prepared to lose, a significant portion or even all of their investment.
So it's not just about whether there's potential upside, it's about whether you're comfortable with the level of risk involved.
Yeah. Exactly. Investing is all about balancing risk and reward. And in this case, the risk seems to be outweighing the potential reward, at least for now.
Yeah, it's a classic high-risk, high-reward scenario, but with a lot of unknowns. And it sounds like you're advocating for a wait-and-see approach.
Exactly. There's no need to rush into a decision with FAAS. Let's see how things unfold with the PayMate acquisition, how DigiAsia addresses its financial issues, and whether they can actually execute on their growth strategy. More information will come out in the coming weeks and months, and that information will paint a clearer picture of their future prospects.
Okay, so for our listeners who might be holding FAAS right now, what's your advice?
I'd urge them to revisit their investment thesis. Why did they buy FAAS in the first place? Has anything changed since then? Do they still believe in the company's long-term prospects, even with all these risks involved? If the answer to any of those questions is no, it might be time to consider selling.
And for those who are thinking about buying FAAS, what are some of the key things they need to consider?
Well, first and foremost, do your research. Don't just rely on headlines or, analyst projections. Dig into DigiAsia's financials, understand the terms of the PayMate deal, and assess the competitive landscape. Then ask yourself if you're truly comfortable with the level of risk involved. If you're not prepared for the possibility of losing, a significant chunk of your investment, FAAS is probably not the right stock for you.
Excellent advice. So to sum it all up, DigiAsia is a fascinating case study in risk and reward. They're operating in a dynamic industry. They've secured a potentially transformative acquisition, and they have a stock that is incredibly volatile. It's a story that's still being written, and it'll be interesting to see how it unfolds.
Indeed, it's a reminder that investing is not just about picking winners. It's about managing risk and making informed decisions based on the best available information. And sometimes the best decision is to wait on the sidelines until the dust settles.
Well said. As always, it's been a pleasure having you on the show. Thanks for sharing your insights.
The pleasure was all mine.
And to our listeners, thanks for tuning in to Investing Talk Podcast. We hope you found this episode informative and helpful. Remember, investing is a journey, not a destination. Do your research, manage your risk, and never stop learning. If you enjoyed this episode, be sure to subscribe to our channel, share with your friends, and leave a comment below. We love hearing from you. Until next time, happy investing.